Again, welcome to today's BTC session, and which is Beyond the Chart. So let's proceed. First and foremost, as you can see, I'm actually on DXY. If there's one thing I would love to see, or one thing I would love to do, is by making sure I go through every single perspective of the market. So that is understanding what the market is doing long term, understanding what the market is doing short term, long term, and short term. Now, if we want to also look at this specifically from DXY perspective, right, we will totally understand that the market will run into the level of premium, which is the area of supply. Okay. Okay, so now first and first, we want to totally understand which is this. Now you check how the market gives us a very quick move to the downside. Is my voice echoing?
Yeah.
Okay, I'm coming. Is it still echoing?
No.
Okay. Okay, good. So now, if we check, it seems one of us actually somewhere. So it seems my voice is actually echoing from your background.
Oh, it's coming from my speaker.
Oh, okay. So that's much. So that's much. Okay, so now as I see the market gave us, if we're checking the 1 month perspective, if we're supposed to look at this from the 3 month perspective in the market, as I said, if there's one thing you want to do is by making sure you follow structure and follow every single principle of the market. Okay. Now, if we want to go by using the 3 month perspective on DXY, right? We would also want to realize that the market is extremely bearish. But there's one thing the market has not actually done, which I'm going to let us know that the market gave us a break of structure according to structure. Yeah, right. The market rallied into certain area, but did not get above 50%. Please take note of this. Did not go above what 50% on DXY. That is back into the level of premium or what we call supply. So the market failed to run through this by mitigating any of the POI above the area of what of premium. Now, we gave us this quick move by mitigating from somewhere. In fact, we even have liquidity wrestling above this high. If we check carefully on hidden liquidity, now, which is cost, market belt cost above the market, and gave us a quick break of a structure to the downside, notifying us that we are still very much bearish, irrespective of the fact that we have this, which the market has not actually rated here, right? Which is above the marketplace, or did not get into the level of premium. Now, normally we want to know that the market is at a very good level on DXY, yeah, for a bearish case scenario. Am I right? If we want to really take this, we know that good, the market has actually run through or run back into the level of premium. If we want to go by this break of a structure that occurred, like this initiation that occurred in the marketplace, which is this break, if we want to go by that break of structure, we'd also want to realize that that the market is bearish, right? As I said, irrespective of the fact that the market did not run through or run into the level of premium, which is above the marketplace. We've had this break of structure that notifies us that we are still very much bearish. I would love to consider all this by range structure and this pullback, which is the minor, right? Now, a break of a structure, a quick one, then we notice that this area is actually it's actually an origin. Okay, it's the origin of this whole entire move, the break of a structure that occurred to the downside, notifying that we are extremely bearish. Now, if you notice carefully, likewise, you will notice that the market is mitigating from our bearish breaker. Are we together? Market is mitigating from our bearish breaker at POI. Are we together? Which is our point of interest. So you see, a break of a structure, this still lets us know that we are still very much bearish. I keep saying this until I see this particular high, right? This particular high, read it. Now, but we're looking at it long term, we will totally understand that DXY is extremely bearish, right? That why? Because the last break of the structure happens to be to the downside. Now, we are having a market run through back to our extreme, which is back to this origin, because, please take note, because the break of structure that occurred there did not give us spacing, that there was not enough distance away from the break of structure. Because if not, most times the market will have to give us certain case scenario by running through, come back, break structure to validate liquidity, and come through to read it according to structure and liquidity. Okay, so but we're looking at this, we totally understand that the market gave us a break of a structure, letting us know that we are bearish. And due to this little distance, but this is actually an initiation, letting us know that we are still very much bearish. Now, what we're having here at this right-hand side of the market is a mitigation. So the market successfully is mitigating from the area of what? Of the breaker. I hope we are together. Are we together?
Yes.
You will notice that the market, first thing, we want to visibly see what the market is doing. So we don't want to mark things that are quite unknown, right? We don't want to sit down and make certain how should I call it, assumptions. We want to totally understand where the market is coming from. I told someone, I said that this area of the market and see these lows here, this course. The market breaks this successfully and even runs through back to 80% of this range. 80% back of this range. Trust me, this low here will be swept. I repeat, will be swept automatically. I repeat, will be swept automatically. Because this low is visibly seen as liquidity. This, not even as normal structural point, this area will be seen as liquidity. This particular low. So we're having this mitigation now. After understanding that the market is mitigating, because as I said, it's one thing I want to understand on the marketplace. I want to totally understand where the market is mitigating from, right? And what's actually sponsoring that move. Where the market is mitigating from, and what's sponsoring that move. The next thing I want to understand is, are there certain areas the market needs to fill, or is there cost, right? Did the market build certain costs for the market to come back to read? Because before the market does, how do we call it, create an effect, there must be a cost the market built over time for the market to give us that impulse move, either to the upside or to the downside. You don't see the market run through to the upside, to the downside, because it's either broke structure to the upside. There must be a reason the market needs to run through above the old highs or run through above old lows. Okay, now look at this area. I'm going to interpret this structure, right, from two perspectives. I repeat, from two perspectives. Now, let's assume we already know where the market is mitigating from. Okay, let's assume, take note, as I said, let's assume the market is mitigating from an exact point of interest. Now, a break of structure, if we want to look at it in terms of this structure, yeah, we will totally understand that the market gave us BOS to the upside. Yeah, right? Are we together? Are we good?
Yes.
So we notice that,
Yes.
So we notice that the market gave us a quick break of structure to the upside from this left-hand side. Yeah, that's to let us know we are bullish from this end. Are we together? From this particular end, I believe to illustrate from the long-term perspective of DXY, letting us know that we are bearish and we're mitigating from this point. Now,
Listen, sir.
I've not brought it together by letting us know that looking at this perspective, we are now bullish from this end. Right now, good. What's the market doing from this perspective? Are we possibly seeing the market make it decline into this area? But mind you, there's something the market is reacting from, which is this. Are you seeing this? There's something the market is reacting from. Now, this fair value gap we've seen the market is reacting from. If the market closes, if the market closes with body, right? This is a new month. This is a new month. Are we together? This is a new month. This is the opening of a new month. This particular candle is the opening of this new candle. This is how the market started. So now, seeing this visibly being bearish, are there possibilities that the market will continue that bearishness, having reacted? Now, if the market wants to respect an FVG, I hope you're listening. If the market wants to totally respect an FVG, it will have to close above it with weak. Are we together? It will do what? Have to close above it with weak. Make that. Then what I'm looking forward for will be a continuation for this high to be raided. Now, I'm trying to break things down so that you understand how FVGs are being operated. Are we together? How FVGs are often operated. Now, look at this area. Look at this. Now, let's assume let's assume one time in the market, this area never existed. This at this right-hand side. Okay? Did not exist at all. Now, so many persons would have assumed or taken this area as a break of a structure. Am I right? Yes or no?
Come again.
This area, the market people would have seen this area visibly as a break of structure to the downside if
Yes.
the right-hand side did not exist. Now, see how the market is actually quite very funny. We investigated, look at this fair value gap here. So I'm trying to make you understand by the market needs to automatically close that FVG with a wick, not a body. Coming, seeing this. So many persons who would have actually been looking out for sell continuation from this perspective, right? Sell continuation from this perspective. You see how the market closed with body into that fair value gap. You see how the market made its continuation to the upside. So each time you want to see if a fair value gap be respected, you want to see the market close with wick, either above or below it off, before you start looking for sell continuation. So that's the same thing visibly from this perspective on DXY. So are we going to be seeing a body close into next month, right, to raiding this low? As I said, I want to explain this structure from both ends, this market outlook. Okay, so we need to make sure that we don't make certain mistakes while taking actual trades, right? Refined trades from the lower time frame. Market outlook, we're looking deeply into the market should be doing long-term perspective, okay, or long-term or short-term perspective. Now we have this high I traded. I want to interpret exactly what happened here. Now I wanted to see exactly that the market created this gap. Are you seeing the fair value gap around this perspective? 1, 2, right? You see how the market closed with wick from this. I see the total rejections that kept happening from this fair value gap that was created, right? The rejections. See how the market closed with wick, opened a new one. Now opening this made us know that this was a continuation. So the market now came back by raiding this low, because this low here created this high that failed to break short. So therefore, this was the weak high. This high was weak. Sorry, this low was weak and could not use this high to break structure. Therefore, the market had to come back to raid it because it's a weak low. So raiding that, we broke structure. By structure, if you want to totally go by structure, this is normally a break, right? A normal break. Why? Because the market gave us a weak low. The market came back and raided it. But you see, this is not the actual things I want to see as a strong high. Okay, so the market now also had its own perspective above the marketplace. It needed to read, which is this. Look at this perspective. This is our liquidity void, yeah, right? Our liquidity void. So the market had this imbalance. Likewise, from the upside, the market needs to what? To read. Now, and we want to also interpret in terms of structure. The market create what we did. This low created this high, and this high. Now, this high is supposed to. Well, immediately the market gave us a break of structure. We're supposed to be seeing a continuation setup. Please notice, we're supposed to be what? See a continuation setup to the upside to break this high. Please take note. We're supposed to do what? To see continuation setup. Look at what happened here. You see that the market broke structure. Did we run through back to point of interest? Did we go back to origin here? We didn't go back to origin. So the market gave us a break of structure and gave us a quick continuation. Gave us a continuation. But that continuation is not valid yet. But it gave us a rejection and gave us this quick continuation to the upside. You see, it has not even run through into this area. But in this case scenario, we are going to assume that all this did not even exist. Now, we're looking at this side. The market feel this imbalance properly, right? Having feel the imbalance and you see this quick move to the downside, very quick one, after filling this imbalance properly, right? Now, normally, based on this, we have our mitigation. So we have our fair value gap. So the question is, what is the market willing to do by this week? Are we closing below this low? Or we will close with weak above this fair value gap? Please, are we together? Now, that alone to be able to define your trade setup on if you're looking for buy continuations. You don't just jump into the marketplace because the market has given us a break, according to fair value gap. There are certain principles the market needs to obey. And if you don't see these principles, you don't expect to even look for trade setups. Are we good? Hello, people. Should I go and rest?
No, we are with you, sir.
So, you see, these things here, likewise, helps us understand exactly what we're doing. We don't just jump into the market because the market is extremely bullish, or the market is extremely bearish. So we now totally understand that this is an area at premium or supply. The market has to feel, right? We've done a very proper mitigation, right? Now, what will the market use to validate that this area has been swept completely by breaking this low? That's the validation. So once the market breaks through, we will now look for sell continuation, continue to the downside. And I bet you me, if the market breaks this low, right, and gives us a very clean what? Clean continuation, this low is not safe. This low here, this particular one, in fact, I'm not mentioning this particularly. I'm looking at this. This low here, not safe. So what we want to see for this week, let's watch to see how the market will close with week above the fair value gap. All together?
Yes.
So we want to see that, and by seeing that, we will make big continuations to the upside, and we can visibly see that. We can visibly say then see that the market will read this and return back into the premium area it built to what to run through. The only area based on structure that the market will raid to give us a break is when this high is raided. And are we sure that's possible? Do we understand that? So are we sure that is possible? So the only area high, and this particular high actually occurred 1985 on DXY. So I'll give us a very quick assignment here. By 1985, go back to take what exactly happened that made DXY decline during 1st February 1985. Are we good? So take the factors, right? Take exactly what happened that made DXY give us a total decline. Take note, a total decline to the downside from that in 1985. By doing so, you know exactly what the market wants to do here. Then, if we have the same underlying factors, trust me, we will boom to the downside. We'll break all this. Are we good? Okay, so that's actually that. So I'm going to move down to the that's monthly, move over to the weekly or week. Okay. So the market mitigated from this perspective, having this liquidity view, this liquidity void field on sell side, fair value gap visibly. Then we have this certain imbalance. As you can see, we have this imbalance in the market. So I will have that as an underlying factor for the market in itself to visibly see over the week or over the week or next week, depending, or during this month of April. In the month of April, there are certain things I actually want to see. I want to foresee this area being filled. Probably let's say about 50%. I want to see this area filled properly in the month of April, and by any means, if the market give us a very quick move to the, I repeat, to the upside by closing with weak, then successfully. I'll be looking for trade continuation to visibly be careful around here, this POI specifically, but I want to see this in the month of April. I want to see this extremely filled, which is the imbalance. So I'll move to the daily time frame. Okay, so now on the daily time frame, if you check carefully, you watch how we have this gap we have during the Sunday to right. This is Wednesday, Thursday. You see this gap in between the market created, so we're going to do a little bit few on it before we do a quick run to the upside. Now we also have where the market is actually reacting from. We are reacting from this area. Should I see the mitigation block or the break, the bullish breaker? Right. So this is where we have our bullish breaker. We have that market is reacting from the bullish breaker in itself. We have this imbalance where the market will successfully have to fill in the month of what in the month of April. This is a break of a structure, a quick break of a structure from this daily, right? From this daily. So a quick break of a structure to the upside. So you see how the market filled its fair value gap. So I don't expect the market to fill the area or to go above this area based on the structure because of the fair value gap that has been filled successfully well, right? The fair value gap that has been filled successfully well. I don't expect the market to go above this region. So all I'm expecting in the month of April, as I said, I expect the market to fill this area of imbalance successfully and either give us a quick move. We could actually have a quick sell, depending. As I say, all I want to see is that I want to see the week continuation, which I've shown us on the monthly time frame. If we close with week above the fair value gap, that has been created, and we close with week, then we'll make certain continuations to the upside. Okay, and we watch how the market will feel this over time. Then, as I said, we don't expect the market to anything above this high, so I consider as a break to read every other POI above here. Now, why are we going to go above this high if the market breaks this? Because there is cost built over time in the marketplace, which is liquidity. We have this being created, right? We have this course being created. So we have a break. If you have a break above this, automatically we are sweeping the liquidity that's actually resting above the marketplace in that perspective. So, but as I said, all I'm expecting is that I want to see on the market close a week on the monthly time frame. So we move over to the 4-hour time frame. Right now, if you also likewise check on the 4-hour time frame, you see that we are actually having something quite should I use the word delicious? We have this quick break. So let's assume this is our break of a structure from this perspective. Our quick break from this perspective, you see this that's actually been created. The market might actually want us to have a very quick taste above this region, right? So depending, we move over 4-hour time frame. We have our 1 hour. So based on this, we're actually playing a very quick structure here, right? You see, we already building certain liquidity here for the market in itself over time. So we will have the market run through back into this region, right? So depending on how the market reacts, then we know if we sweep in this between this week to build the imbalance that's resting above the marketplace. Now we're going to check other trade ideas, right, to see if it quite resonates well with DXY. Looking at GBP USD, GBP USD is doing quite a little bit of the opposite. We have Euro USD. Euro USD is trying to fulfill its perspective more like, oh, wonderful, wonderful, wonderful. Okay, so you see that I actually forgot to send this as a last week. I think I did a very quick structural model continuation to downside for Euro USD. I actually failed in sending that to the community. I think I will do well by making sure we have that. You can see this was actually marked over time with this. We have this area being filled. We have the break of the structure letting us know we've gotten certain initiations, marking the area that is very necessary for the market to read. The certain models I think I've shared to the community, share the market has successfully filled that certain criteria. So what's needed is of two things: either the market do that third continuation to the downside to sweep this low or give us a quick count of liquidity before selling to the downside. So we're doing the opposite or quite opposite of DXY on EU. Are we together? So as I said, we were having that quite opposite. We'll be having these certain areas on Euro US being swept off completely. Because the market created certain areas of course, right? We have all this below the marketplace, all this below the marketplace, the market needs to successfully fill. Okay. Well, we have that area the market needs to successfully fill. So we are actually be having this low swept. We're not careful. So if it's an area where we want to likewise want to consider, even if you want to take a risky buy, right? Even if you want to take a risky buy, the only area that we consider as a buy case scenario would be from this end, right? Would be from this POI. But left from, as I said, I would love to see that this low is being swept off completely because we built calls over time. So waiting for the effect where the market gave us a very quick sell to the downside was reading that. Okay, so as I said, a quick break of the structures of code here. We have this that was actually marked. Let's see if we have the 5-minute time frame. So now looking at the 5-minute time frame, so the question here is that since we've had this visibly and not sent to the communities last week, a break of the structure, we have this been swept, we have this model criteria, we have the quick break of the structure, which are called a little bit by, then we have this quick move, right? This could not run through into this because of the there was not enough distance, there was not enough liquidity to push the market to the upside to run through back to this high. So now the question here is for today, this is actually what time? This is 9:40. So can we actually have certain sell continuation to the upside here? So we would love to see certain moves as that. Or likewise, are we going to totally see New York, right? New York or either New York Q zone or New York have this high been swept right before the quick continuation to mitigate properly into POI, and we are successfully reacting from the level of what I call our bearish breaker. So we see at this level of our bearish breaker at the left hand side of the market, this area of this particular area. So the question there is this the actual POI? So we might actually either have the market give us a little bit sweep before we have a proper decline, and that can only be visibly seen, as I said, check through your DXY perspective, likewise in between. So we having this, we have to ask ourselves certain questions. Can we actually have the market during this London session to give us this quick continuation? Because we have this is this a proper break of the structure, the BOS here, right? On the 5 minutes, we go down to 1 minute time frame. So looking at the 1 minute time frame, the next question is: can we visibly see this as a structural point for the market to come back to? Right? Left for me from this perspective, this is actually a range. Sometimes I would love to seek for buy case or sell case scenarios, buy or sell case scenario at the level of range to give me indication for a continuation. Right? So I haven't gotten this initiation, but left for me as per liquidity, I might likely want to be seeing this high being readed. Right? So as I said, I will want to watch certain moves on what the market will do over time during the New York session. So we have this. I said I would love to visibly see this as liquidity, not as an area for sell case scenarios. If the market wants to actually give us that sell move, right? I would want to, because I'm always stick to my principle and what I tend to look for sell case scenarios or buy case scenarios. So the market giving us this initiation right to the downside, is that a very good initiation to the downside? Or likewise, can we actually seek this high as a means of liquidity because of its weakness? So two things are involved. Either we have this been rated to give us a sell move from this perspective, this POI level, before we click move to the downside, right? So if we have a very quick impulse, then we'll have this high being rated. Then if we close with weak, then we make that continuation to the downside, right? So seeing this as a hunt of liquidity. So we can only anticipate hunt of liquidity when the market gives us about 80 to 90% of the range without giving us an external break of the structure from the main external liquidity. So this is the 1 minute time frame. I'll go back by running through the 5 minute time frame back. I see it. I would love to see this particular area being raided if we're looking for sell case scenario. But left for me, I have not mitigated. Left for me, I haven't mitigated yet properly from the main exact point of interest, which is supposed to happen from this very candle. which is supposed to happen from this very candle resting above here, right? That's the exact area I'm supposed to be seeing the market. So two things are involved. Either we have this area as a amount of liquidity. As I say, the only way I'll be anticipating that, I'm still stick to my principle and what I look forward for on my trade ideas, a break of a structural code here from the 5-minute time frame. So even if I'm looking for a sell case scenario, I'm looking for a sell case scenario into this perspective where these lows are located in the market, because we have certain costs being built over time on that perspective. So we have this area being swept, we have this break of the structure, we have this quick move. You see this quick area of how do we call it? You see that quick area that gave us this quick gap here, right? The downside. So which the market had to come back to feel completely. We have Monday. So the Monday, this is actually the Asian low. We have Asian low being created. So we into the Monday, this is 8 a.m. So are we successfully going to be seeing total decline to the downside? I see it, if I'm looking for a sell case scenario, right? I'm looking for sell case scenario above this area into this perspective, right? Or if the market runs into about 90% or 80-90% of this range, I'm expecting the market to do a very quick strip of amount of liquidity. We don't wait for the market to create amount of liquidity, we anticipate it. So we anticipate it by seeing the market do that 80-90% move into the previous range before taking the main external, right? So if there's an area where we're looking forward to for the market to extensively read, will be this low here. So we need this low to be rated, but that can actually happen. We've had this as a break, right, which is actually very valid initiation. We need this area, which is the inducement area, for the inducement to be swept off completely to have a very quick move, right? So either we have this, right, or we have this POI for the market to mitigate from. Are we together? Are we together?
Yes.
So you see, I've been able to break down the levels where we'll be looking forward for Euro USD, right? Okay, so that's actually that for EU. And as I said, I've given us a certain perspective for Euro US, I mean for DXY. So the quite opposite for DXY is EU. Okay, so it's EU. So since EU is DXY is looking for buy case scenario to fill the imbalance above the marketplace, right? We want to be seeking this opposite of on DXY. I'm sorry, on EU Euro USD for sell continuations into the downside till this external is being taken out together.
Yes, sir.
Okay, so I'll be sending this image soon, right enough, to the community so that we can actually have a glance on how the market operates or what the market will be doing over time from these key levels, right?
Thank you.
And so we'll have this, and I'm wishing us good luck and good trading. Tomorrow is actually a live session. We're having a live session tomorrow during the London and the New York session. So do well by anticipating. And make sure that you likewise share the community link on your status and likewise have other persons to join. We'll be running more of them to look forward for on over the time in the month of April. We'll be running either trading bootcamp, a bootcamp, a 30 days bootcamp, and likewise inclusively with trading this or a 30 days marathon. So this will only happen when we have certain anticipations and intentions on the community. So by so doing, I will announce that soon enough on when it's actually to begin. I'm going to